important advice on credit cards they can't afford to leave home without. Otherwise, they may wind up learning a painful lesson about debt, just like Astrid Jones, who wound up owing over, that's not Astrid, that's actually Luther, but over $8,000. She's with me along with credit counselor Luther Gatling, who you just saw, and Larry Chiang, who markets credit cards to college students. I should note that we invited spokespeople from several major credit cards to join us this morning, but they declined to comment. But Larry, I wanted to talk with you about the credit line these kids are given. I mean, we're talking about they have no income, no viable source of income, but yet what are their credit lines?
Typically, issuers will issue lines anywhere between $500 to $2,000 for a person who does not currently have a credit card that is enrolled at one of the four-year schools that we market to.
What are the percentage rates on interest?
Interest rates vary anywhere between 12.5 all the way up to the low 20s. We've even seen interest rates as high as 21, 22% from banks that are looking to cover those types of loans.
You don't have the parents co-sign, but do you have the students put their parents' income down?
No, that's not even a question that's on the application.
Larry, what do you think about the whole idea? I see you wanted to make a comment about the percentage rates and the interest rates and the credit line.
The percentage rates are the same as they are for anybody. There's not a special rate for a college student.
Right. And
there are those inducements, as he talked about earlier, to get students to sign up.
Well, Larry, what I read before is that the repayment rate of students is actually better than the general public. Is that true?
Right, right. Ever since 1992, the charge-off rates for college students within college portfolios that we've helped our issuers acquire has actually been below the national average. The national average is around, it's tweaked up a little bit to 4.6, 4.7, but the college student charge-off rate is well below 4%. Some portfolios that we have are right around 2%. So that's definitely a correct statistic that Luther brought up.
Luther, I mean, that seems like almost a better average.
But again, it's where the parent is fortunate enough to be able to pick it up. Those youngsters that he's talking about, they don't have jobs. Where did that money come from? A lot of times, for instance, people get student loans from the state or from the federal government, and then they'll take the student loan money and take it to pay off the credit card. So that's part of the reason why that average is a little higher. Is it good? Absolutely not. Because
Luther, you have some credit advice you have for people. I want to go through some of these. First, pay your bills on time. Why is that so important? It's
very important because that's where the interest charges get built up in there, because you've got late charges on top of it. Plus, your credit report's going to reflect that as negative information on the credit report. So paying on time is very important.
Okay, the next one is know how much credit costs. What does that entail?
We just talked about it. The interest charges. What does it cost you? How much interest are you paying on it? What are the late charges if you don't pay on time? What are the penalties? And always take a look at it, see if you made only basic minimum monthly payments, how did it affect your credit? Did your credit actually go down from a monthly payment, or did it just stay where it was?
So you have a $2,000 credit line and you're paying the minimum payment. How long does it take you to pay it off?
It will take you 11 years to pay it off. Not only that, at 18%, it would take you 11 years to pay it off. In addition to that, you would have paid $1,900 in interest, almost double by making basic minimum monthly payments. So that's a no-no. It's like lighting a match to money.
So the third one is avoid that minimum payment. Pay how much more?
Well, you should try to either up and double it if you can. But see, take a look each month and see where did it make a difference. Where was the point where my debt started to go down rather than continually go up?
Okay, know when to say no.
Yes, that's the hard part for a student, knowing when to say no. You know, you've just been liberated, you're home, you're away from home, and all of a sudden here's all this wonderful world of credit being offered to you. Know to say no, because the effects of it will affect you the rest of your whole life.
Astrid, did you have a problem saying no?
Yes. Yes, I did.
One of the things I find fascinating, though, it's tragic, actually, because of your credit problem, you actually dropped out of school.
Yes, I couldn't, well, I wasn't able to finish school, and when I thought about going back, my credit was I was in so much debt that I couldn't go back to school because I had to work to pay it off, try to pay it off.
And your parents couldn't help you?
They had their own financial problems, so it was my fault, so I had to take care of it.
Now, Larry, I have to ask you, I mean, there seems like there's got to be some shared responsibility with the credit card customers.
Definitely.
Here we've got Astrid, who can't even go to school now because of the credit card debt.
Right, and we definitely applaud organizations such as Luther's that go into credit counseling, although it's a little late because he's seeing what happens downstream. But you're exactly right. There are definitely areas of responsibility that we as marketers and we as issuers have to accept. And there are areas, though, where just within the credit card marketing industry that have been very innovative. There have been efforts from Discover's standpoint to go into credit education and along with their whole entire wellness program.
Larry, thank you very much for being here, and Luther and Astrid, good luck. That's all the time we have for Fox on Consumers for today. This hour's top news stories are next in Fox News.